Congratulations! You found the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure ratio market breadth indicator for April 26, 2015. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell from 1.23 to 1.18, declining slightly into less bullish territory. The total count of securities in bullish or bearish patterns rose 1% to 3,105. The count of bearish stocks increased 3%, while the count of stocks in bullish patterns decreased 1%. The Pirls P&F Market Breadth Summary Chart shows us a market now 2 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Register. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 29 points for the 13th rise in 27 weeks. At a positive 220.48 points, it continues above the November 2014 top and below all 8 other tops above plus 100 and above all 5 bottoms below minus 100 in the last 3 years. Market Gauge Volume Analysis. In this week's volume analysis, all indexes ended in neither accumulation nor distribution mode. In the last 2 weeks, the Nasdaq 100 Trust had 0 accumulation days and 0 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq 100 Trust ended in neither accumulation nor distribution mode. Momentum. 1 week ago, at close, on Wednesday, April 15th, the CCI 20 had 6 consecutive days above zero for a Woody's trend change to up. At Monday, April 20th close, the CCI 20 formed a valid Woody's zero line reject entry point from the Friday, April 17th pivot at minus 13.38 within the plus or minus 50 range. We will follow the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 40 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. The CCI 20 weekly continues in a Woody's uptrend and remains outside the plus or minus 50 range for a valid zero line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only 3 of the bottom 5 are negative. Bullish, Comp Tech has entered the top 5. S&P Retail has left the bottom 5. Bearish, Oil and Oil Services continue in the top 5. REITs continues in the bottom 5. Disk drives and computer hardware have left the top 5. Computer hardware has entered the bottom 5. Focus this week. Banking is definitely changing and not for the better. From www.asnp.com, actingman.com, The War on Cash Migrates to Switzerland, by Peter Tenebrarum. The following are a few quotes from the article. Surely everybody is aware that Switzerland regularly makes it to the top 3 on the list of countries with the highest degree of economic freedom. At the same time, it has a central bank whose board members are wedded to Keynesian nostrums similar to those of other central banks. This is no wonder, as nowadays economists are trained in academic environments that are dripping with the most vicious statism imaginable. So, how come the unnamed large bank, they should have named it just to see what happens, is so bold as to break the law by refusing to pay out funds in a demand deposit? Note here that it is indeed breaking the law, as there is nothing in Swiss legislation that states that banks are allowed to refuse or delay servicing withdrawals from demand deposits upon request. The answer is that it has probably received a directive from the Swiss National Bank. Note here that these directives are not legally binding. In other words, large depositors in Swiss banks have now become victims of collectivism. Collectivism is, of course, precisely what informs all central planning endeavors. Obviously, property rights count for nothing if the central planners can revoke them at the drop of a hat. If this can happen in prosperous Switzerland, based on some nebulous notion of the collective good, which its unelected central planners can arbitrarily determine and base decisions upon, it can probably happen anywhere. Consider yourself warned. Better continue stacking and keep a pile of this within grabbing distance. After all, it can be purchased at a generous discount these days. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a great week coming up, and, as always, wishing you true success.